The following is a presentation of TFNN. Live at TFNN, the Bull Bear Binary Option Hour. Brought to you by Nadex. Now, Tom O'Brien, Darrell Martin, and Steve Rhodes.
Welcome, folks. Steve Rhodes, Tom O'Brien. Appreciate you growling and prowling with us out here. We have the Dow Industrials right now up 21. Nasdaq's flat. We get the S&Ps up 2. Gold contracts up $12, trading at that $13.89. We get silver up 45 at $22.03. Bonds up 30 ticks at 120.21, and King Dollar up 58 at 80.80. What's going on, brother?
Doing, Tommy?
I'm doing great, man. You ready for a good day out there?
Absolutely. Ready. You know, it's been I was shown during the first hour, it's been a trader's paradise.
Yes.
And if we took a look, I went ahead and put the ES Mini on the weekly chart. And if you took a look at the weekly chart, this was as of early this morning. We've only seen in the past 3 weeks, we've only seen basically a 2-point budge.
Right. No, it's.
But yeah, but we've had 269-point moves in a single day. It has been a trader's paradise to the upside and to the downside.
There's no doubt. And folks, if you haven't test drove the Nadex platform yet, come over to our website at TFNN. You're going to see the banner on the very top. On the side, you can pull it up right now. They'll put $25,000 of funny money right in that, and you can see exactly how this works. Because in the context, folks, so that the S&P right now, which is going to get really cool, folks, is this. So picture, yesterday what happened is this. You got the day prior to yesterday, you come into the downdraft of the 6th, and you come in with basically lighter volume. And it's almost a 90-point A to B structure on the way down. So you come in with lighter volume, you bounce. And for bulls or bears, as Steve was just saying, it's a field day if you can flip positions, because what you have here now is this. We're going to go to a higher high today. You're going to have lighter volume. And, what I'm looking for, Steve, I'm looking for the 1655 to get hit. It's deviant, but that's on the cash.
And I tell you, I'm on board with you on the actual cash. I've got a 30-minute chart up on my screen right now.
Yes.
And you're thinking about the 1650 area, and at 1659 it sets up a nice Gartley sell pattern. So in between that range,
that's
somewhere.
Even better. Oh man. Okay.
So 1659 ends up being a 1.272 expansion of the B2C swing point. So it's somewhere in that range, that 1650, 1659, but somewhere in there. And it's a nice looking pattern, on the cash. It's a different looking pattern on the actual futures contract, but with a break with the higher move today, closing the gap that that's trying to do right now from the 4 o'clock close from Wednesday out there, and June 10th, that low was like 1640.76, and you're pretty close to it right now. That's what it looks like it wants to do.
It'd be so cool here, folks, and Steve, is this. So the A to B equals C to D on the way up, what we're talking about in this Gartley, right?
Yes.
So check this out. On the 10th, folks, okay, so the B point on that move is June 10th. Now, June 10th, we had anemic volume, okay? So check this out. This is really a trip. On June 10th, folks, you only had 595 million. So what the Bears would love to see, what I'd love to see, okay, is you come over that, of course, and it even gets lighter volume, because, see, that's going to be hard to do, number one, to get lighter volume than the 595. And number two, what you're doing, if in fact you get that, then you get a target Gartley, because what will happen is that you're over that swing point, you'd have lighter volume, and the volume that we had off the high is extraordinary. So this setup is nice. And in the context, folks, of how the market's trading right now, let me tell you something. The bonds are saying we're going down, and King Dollar is saying we're going down. Both of them just got back inside their larger range. The bonds in particular. You know, the bonds.
On the bonds, in the bonds here on the weekly chart, and I've pulled that up for you to take a look at. The move down here that we've seen this week, it's really up against two nice Fibonacci retracement levels. One, if you just come off of the swing point, Tom, from March 23rd's low to the high that was put in on July 27th, it's a 0.786 retracement level. Then, if you go back to really the next major swing point, which would be the February 11th low out there to the high that was put in, it's only a 0.382 retracement that's been done.
That's beautiful confluence. Yep.
Yeah, and exactly. And this week here right now, if you finish off where you're at, you've got a nice little bullish engulfing candle.
Yeah.
So
you bet you're back inside it.
Yeah, so it's really setting that up, and you know I know Bud had a great workshop last night.
Yes,
and you know in keeping with the channel lines and trend lines right now, the ES Mini, and I've got the 120-minute chart up on my screen here. So the blue lines are the downtrend channel that the ES Mini on the 120 has been traveling within. And what we saw yesterday coming right into the close was a slight break above that channel line. Now, the red line on my chart here is really the trend line.
Yes.
And so it ran into it. And, you know, what happened, you know, and this could be a real breakout. I mean, that's what it's signaling right now. And once it broke through that downtrend channel, all that it did last night and early this morning was come back and test it like it's supposed to.
Right.
You know, so it came back, it tested it. Right now you're breaking above it, and we get a close you know, somewhere above. Well, it'd be nice if already you're getting confirmation, but double confirmation, probably a close above 1634 as this session ends here. And so that sets up everything that we're just looking at on the on the S&P cash as well. So we'll see if it's got the energy to do it.
Right, no, exactly. And you know, what I did do last night, Steve and folks, I ordered Larry's life jacket.
Oh, good.
It's not a private joke, folks, but what's going on is this, is that I think the number I have to get to is it 150, I think?
He might cut you some slack. I was going to say 160, but I don't. We probably have to.
No,
I'm going with you.
I think it's going to 160 anyway. Z says 160. Okay, so 160. That's a long way. I could dig that though. Let me just look at this bond for a second. So what you have with the bonds, folks, is this: the 30-year. If we take a look at this, all it did is bottom line, basically come back to a breakout area. And, we rejected it. Now, what you're going to have on a, let's see, 141.30, we're at 141.21 on the continuous contract. Okay, once you get back inside 141.30, we're at 141.21 right now. That's saying, hey, you're going for the tops again. So this is going to, there's...
Well, we might have to get him some Dramamine, one of those wrist patches, every other scientific.
Yeah, I'll tell you, folks. So Larry and his wife were at my house, and this is how this started. I wanted to take him out for a ride, and he was like, I don't go on boats. I said, come on, man, you got to. So the bottom line is that I got him and his wife out. And so that's what the joke is, folks, because that was on the power boat, but I'm going to get him on the sailboat. That's a different ball game. We'll make sure it's nice and calm out.
I love it.
I'm telling you, man. So, what gets interesting here, too, is this, folks, is that it's where we are time-wise right now, meaning that we're in June. And you always have to be cognizant of a couple different things in the marketplace. One of the biggest ones I've seen on a continual basis is that, people always talk about September and October, and that's always a problem, folks. Not always, nothing's always okay, but you got to be cognizant that there can be a lot of selling during that time frame. But what there also is July can turn into disasters. I've seen a few disasters in July. Now, in that context, which is really cool, because as Steve and I started the program out, we're talking about the trader's paradise, is we have enough time to have July have, a heavy downdraft, and we have enough time for an August almost all the way back up, and then September and October, man.
No question about it. You know, and it's interesting because the market, in this trading cycle, it's really been giving lots of great signals. Like you were talking about, coming back into last Thursday's swing point with lighter volume. You know, that was just a big signal that, the retracement back up was shallow. So on the move back down, it really should have had the energy to have busted through.
Right.
And it just couldn't do it. So we were watching it come back and pull back and say, okay, which was really interesting because, what was it, 2 nights ago, when the Nikkei was down 600-700 points, whatever it was, everybody would have thought the crash cycle was going to take place.
I'll tell you, that right there, folks, okay, this is what happens for some reason. When these numbers start hitting, okay, and there's a couple different things that happen. Everyone, was the Fed controlling? No one controls anything, folks. Okay,
sure.
Everyone thinks they control things. Okay, bottom line.
I think the moves down here, whether it's in the FTSE or the Nikkei or what have you, show that the market's bigger than the Fed.
No doubt, no doubt. And what is really cool is that when they start hitting, folks, let me tell you something. They hit, and they'll hit for whether it's 6, 7, 8 months in a row. That's just how this goes. And one of the biggest signals was the other night, Steve. There's no doubt. When I saw that, and I'm saying to myself, when I was on the air, folks, I was saying this is going to be the most weird thing in the world because, the bottom line, the Nikkei wanted to go higher, and I'm saying to myself, well, guess what? The Nikkei wanted to go lower, but our market wanted to go higher. And
yes,
in that context, that is so hard to happen, folks. It's insane. But guess what? That was harmony, man. That's the thing that I'm so psyched about right now, Steve.
Yes.
Because we got the bounce, number one. And, of course, the bulls are going to think that, oh, this is it. We're off to the races, okay? Because of that divergence, folks. That divergence is insane. I mean, and believe me, if I was at a different time frame in my market head cycle, I'd be saying that, go mortgage the house and buy the market, man. Do you know what I mean? Because the fact of the matter is that the Nikkei crashed, the Europe went down, and we went up. It's like, okay, well, we're different. Well, we're not different, folks.
Yeah, what's interesting too, because from the technical side, for bulls that take a look at different indicators out there.
Yes.
One that I used yesterday in order to buy the ES Mini, in order to buy the futures, was taking a look at the McClellan oscillator, which had not yesterday, but the day before, gotten down to a level of -302. Now, when we had that big bounce on last Thursday, it had gotten down to a level of -330. So when it gets down to those levels, in the past it has formed significant bottoms. Just to give you an idea how tough it is to push down there, since 2001 there had only been a dozen of them that had gotten down there.
Oh, that's pretty cool, man. Yeah.
And if you overlaid them on charts, you'd see significant bottoms. So for me, it was pretty easy on June 10th. I was on the air and the market was coming down, and I'm opening up at 9, and I'm telling people, not so fast. The market's going to bounce.
Yeah, that's cool,
I know
man.
People are saying, how are you calling that?
Yeah.
And so one of those was, there were a number of things, but this was one of those indicators, knowing Now, the mere fact that we only had a 2-day bounce and then another move back down there, to me, that's more of a signal that the oscillator, that it's actually failing.
Yeah, which is dynamite. Exactly. Yeah. And that's, folks, those are the things, in the market, but in life, that you really want to get your head wrapped around, because you can find out more about them. Yes. This is Steve Rhodes, Tom O'Brien. Man, I miss doing this program with you, Steve. This is a beautiful thing, man.
I hear you.
Seriously. You stay right there, folks. Steve Rhodes, Tom O'Brien. We'll be coming right back. We have the Dow up 14, Nasdaq down 1, S&P's up 2. We're going to be right back, folks.
The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Steve Rhodes, Tom O'Brien. Appreciate you growling and prowling with us out here. Right now, you get the Dow up 12, Nasdaq down 5, S&Ps are up $1. And commodity-wise, folks, let's get sweet. You get sugar moving, coming off the bottom. She's at $16.80 right now. Silver is up 37 cents, and silver and gold, folks, there's nothing there. So, you know, you want to get excited about it, buyer beware. You're on a Friday, and you get a higher gold price with 69,000 contracts, and that's just trouble in paradise. What you'd love to see is it actually being down today with 69,000 contracts versus being up. So this little baby's not over yet. Let's go to Mike in New Jersey. Hey, Mike, what's going on?
Morning, Tom. How are you?
I'm doing great, man. You having a good day out there?
Pretty good.
Pretty good?
Yeah, pretty good.
Make it real good.
Yeah, hopefully by 3 o'clock it'll get real good.
There you go, man. What are we going to look at?
I got a long-term hold. It's called Heartland Payment Systems in my account.
Okay. Let's take a look at it. You got It's HPY. They provide bank card-based processing service for small and medium-sized merchants. It's hitting a high today. The low's 25, the high's 35. What is interesting about this, too, folks, is that there's a 27% short position in this equity. You know, and you're in good shape, man. You know, what's interesting here is that you got a huge short position in it, and the setup is dynamite, meaning that it wants to go higher. So it's like, oh, man. So what you have, folks, watch this. I just brought this back. I got this back to 2011. Well, here, why don't I put it up? First, I got it on a 2-year weekly. So when you look at a 2-year weekly, this is what you have. You had an expansion up to 34. That was in 2012. And then you pull back. And when you pull back, folks, you got down. So it had 2 bad weeks. It got down to 26 bucks. And it had volume there of 6.1 million. You know, but depending on how long you've been listening to me, what happens is this, is that until you get to the swing point, folks, let's put it this way. When you have volume come out of an equity or come out of a future or currency, well, you don't get the volume of currencies, but futures and the equities you do. What you like to see is you like to see the energy come out before you get to the swing point. And that's exactly what happened here. Now watch this. This is how intense this is. You had the volume come out at 6.1 million. You got to a price point of 26. The original breakout area here was 24.49. Then what ends up happening? You get to 2606 with 1,900,000 shares versus 3.6 million. What does it do? Takes off again. Gets up to a price of 33.70. Comes back down again, has volume again on it. Guess what? Doesn't get to the swing point. And the volume on the way down then was 6.6 million. But guess what? That was to 6.1 and didn't get to the swing point. And now here's the key right here, Mike. You see how it pushed into on, let's see, May 3rd. The week of May 3rd, that's pushing highs, folks, with volume. 34, 36. You did for 5.5 million. Okay, so now let's put this on a monthly. So now on a monthly,
the week of their earnings.
I'm sorry?
That was the week of their earnings.
Yeah. So on a monthly, you know, what you have is that, yeah, it's been building cause for quite a while, meaning it's been building cause for a year to go higher. That's the way this is kind of set up, you know. So
what I like about it, Mike, is on the monthly chart that Tom is on. You know, on mine, if you go back really to what I like to identify is support and resistance areas. So in this case here, we're talking about resistance, which is really set back up at the 2007 highs, August 31st out there. And that candle there, it's a dark cloud cover candle. Now it's followed up by a little bear sash candle the month of December 2007. And what that really was doing, it was establishing the price area of about $33 as your resistance zone. Then you come all the way back into 2012, May of 2012, another little dark cloud cover candle, and then a bearish engulfing on the month of October 31st up at 32.91, continuing to mark that resistance line. Even last month, the month of May, a little bearish engulfing candle because it's a little doji there. And right now this month, so long as it closes over $33, you've got a confirmed breakout. You know, you're up over an old resistance area, and that should become new support, which is $33.
Yeah, and you got a 27% short position, man. So they're gonna there's gonna be a lot of squeezing on that baby, man. Cooking, brother.
I didn't realize short position.
Have a great one, man. Have a safe one. You stay right there, folks. Steve Rhodes, Tom O'Brien. Appreciate you growling and prowling with us. We had the Dow right now down 3. Nasdaq's off 3. S&P's a flat. We're gonna be right back, folks.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Steve Rhodes, Tom O'Brien. Appreciate you growling a problem with us out here. Let's take a look at some of the high volume stocks in a low volume market, folks. And let's see, I'll go from Europe. I'll come back to the United States right now. Okay, so, there she is, BAC. That's going to be interesting. No, Bank of America is down that's 6 pennies. You have Comcast off 25. There's really not much moving out here. Not anyway. Big Blue's up 22 cents. You get ExxonMobil down 46. Oxy is off 78. And if we go look at that energy sector for a second, XLE. So you had, that's going to be interesting. Let's see where that shakes out. You did have oil pop out here this morning, folks. Okay, CLN 3 and Yeah, she's at 97.90 right now. She's got 98.22. It's going to get interesting. So the top swing point on that is 99.77, folks. Yeah. Let's see.
Yeah, wants higher price, unfortunately.
Yeah. She's got no juice, which is beautiful, actually. So, the good thing there, Steve, though, is this. You just got to let it be for right now, folks. It wants to go to that top swing point, but guess what? Right now, today, we've only done 111,000 contracts, and you're dealing with going over a swing point of 333,000. So that's a nice way to go. No two ways about that, man.
Yeah, one of the things we got to pay attention to is, we're talking about some of the price channels. And if we take a look, I've got a longer-term chart, a weekly chart of light sweet crude on my screen.
Okay.
So it takes us all the way back to the highs in July of 2008 in that 146 level. And what light sweet crude is actually doing this week, it's now breaking to the upside. It's now breaking that descending price channel. It's been in place for a long period of time. So, it may come back and test it, but it's kind of suggesting here if this is a real breakout, we're going to see $108 barrel oil for some reason, whatever that reason is.
No, I see. Okay, so are you going from the May 011 high? Where are you going from?
Well, I'm taking from the top of July of 2008. So the open there, which was 144.27.
Okay.
And then really the next area that I'm hitting is I
got it. Okay.
Yeah.
Okay.
And it's really starting to break it, and where it has failed, for really the last several months here. When it's tested that area, so we'll see if the volume says, hey, it's a false break, like you're pointing out.
Which is dynamite. I know, folks. This is what happens, folks, on a false break, downtown or uptown. I love false breaks. You don't have to trade the false break when it's there, folks. But as soon as it fails, forget it, man.
Yes.
Yeah, I see what you're just saying. So
we'll see what happens. So it's going to be volume-wise, like you're saying, doesn't have enough. So question is, does it come back inside the price channel, or what happens next?
Yeah, there's no doubt about it. And what you had out here, the spike this morning, folks, is about Syria more than anything. Do you know what I mean? It's like, okay, the whole place is going to blow up over there. Guess what, folks? It's been blowing up for a long time. Those poor people over there, what's amazing is that you can have countries, and then, once these wars start, it'd be like us going downtown Boston or Chicago or L.A., and then all of a sudden everything's blown up. It's like, man, oh man, we're so lucky, folks. You better count your blessings around here, because I'm telling you, man, being born here, or being that, whether your parents or our grandparents got you here, I'm telling you, man, it's a big deal.
Yeah, for sure. Any news behind what was that? Any news behind that quick spike up in silver that we saw this morning? And was that the same time? I wasn't really paying attention to
that was the
light sweet crude, or
no. What happened was this: is that the PPI number come out.
Okay.
And that was in the PPI number.
Okay.
Yeah. And so watch this, folks. This is what's important to wrap your head around. It's always in the context of what you're going against. And what you had here is that silver got nothing. Okay? Silver was going against 3 different downdrafts. The biggest downdraft was from June 7th. Well, it's going against 78,000 contracts, so we've done 29,000. But the top of that number, folks, okay, which it has to get to, which it can't get to because they're selling it, is 22.75. And it went to 22.50, and they unloaded,
They did.
Yes. It's not done yet, man. It's not done, this dollar wants to go. What is getting interesting, there's a couple equities inside the metals market, though, folks, that are there, actually, right now. So, yeah. Let's go to Rob in New Jersey. Hey, Rob, what's going on?
Hi, how are you doing?
We're doing great, man. You having a good day out there?
Yeah, great day.
Good, man.
I have like 2 questions. One, I was interested in shorting the market, and is it better to do it today or wait till next week?
I would wait till next week, because if you just listen to Steve and I, we think it's going to be going a little bit higher first, and you want it higher with lighter volume and a rejection of price.
Okay. And the other is if you could look at CMG and see if do you think that's a good shorting opportunity?
The reason I'd say no on CMG is that you get just about a 10% short position in it. But let's take a look at it. You get Chipotle, folks. The low is at 233. The high is 419. And, no, I wouldn't short the stock, man. Are
there any equities that look good to short? You guys are looking at, or?
You could, once you get this, I'm looking for 1655 on the cash S&P. And you get to that number and you do it with lighter volume, which today we want to. I'd like to be up today because the volume is anemic, big time, which it normally is on a Friday. You get over that 1655, you close underneath it. Yeah, you could fire away at the Nasdaq. You could hit the Nasdaq, the S&P, or the small caps. It wouldn't matter. Those ETF structures, because what you have here is this: you have the A to B point is a sweet. Leg down. It's 1687 is your A, and 1598 is your B. So you're talking what that 80. That's 81 points. So bottom line is that that's what you have once this market turns again.
Okay. Thanks very much.
Have a great one, man. Have a safe one.
You too. Bye.
The key here, folks, is having patience. Patience.
No question about that.
No, totally.
And so I'll put up I shared this with my clients this morning. Let me see if I can put this up on the screen because I was having a little trouble here. So, one of the things, so we all use the VIX for different purposes. And one of the best uses that I've found for the VIX index is on days when there is more than a 10% change from the prior day. And also I think it was on that on the June 6th day, there were a couple of indicators that were, number one, the day before we had about a 12% increase in the VIX. And usually when you get those, when it's above 10%, you usually get a one-day bounce. In fact, coming off of the November lows of 2012, up through the one of 2 days ago, 80% of the time there were 10 of them, and 80% of the time it had closed to the upside on the following session out here. Now, what happened yesterday was with the big move up in the market is the VIX was actually down a little over 11%.
Okay.
So I look at it both when we see increases above 10% or decreases below 10%. And what typically happens, and the chart that I'm showing on my screen here, is when you get a one-day VIX percentage below 10%.
Yes.
What that has typically led to has been an initiation move. And so the combination of what we saw take place last Thursday and then only a two-day rally and a failure, the mere fact that we had, and on my screen here, if you take a look going back to December 31st time frame, it turned out to be an initiation low when we had that big VIX decrease. It did the same thing back in February of 2012, did the same thing back in April of 2013 out here. So yesterday was the first time that we've seen another greater than 10% to the downside. And it says that we should see an initiation move. So when that fails as well, you just kind of mark that out there. It's just an additional indicator of just how bad a shape that the market. Now, what I liked seeing about this yesterday was the mere fact that I said, okay, this makes sense that the market could push up into that 1650-ish level out there.
Yeah, right.
Or at least should. If it doesn't, boy, it is telling you, trouble in River City. The Nikkei was first, and and then the FTSE was next, and then we're just around the corner.
Yeah, no, there's no doubt, man. And those verifications, folks, and those types of harmonies, when you put them together, particularly like that one there is divergence. That's what that really comes down to. And that, folks, just like a failure, you can actually learn more about what the market wants to do because it's screaming out there, and it's really hard to do too. By the way, that's the other side of that, which is really cool. Do you know what I mean?
Yes, exactly.
Yeah.
No, no question. It's hard to do, and so that's why it's great to have that. To be in a market like this, where, look, we can go back and say, if you look at a weekly chart, we haven't budged but a couple of points here. But the reality is, in that couple weeks period of time, there are so many nuggets of information that have been presented to us to give us a idea as to what the market wants to do, and then when certain failures take place, where the market is going. You know, a lot of times we're struggling to find this information. That's what's so great when you got those expansions of that rubber band to both sides.
Yeah, there's no doubt. And folks, Amazon's screaming right now that, you know, guess what? Amazon today, 688,000 shares. You were going into 4.6 million, and it can't even hold the price from yesterday. And you have a high volume at the lower end of the consolidation at 249. That Amazon right now is screaming that, guess what? Next week, you know, end of next week, whatever. Bottom line. So watch this with Amazon, though. This is a trip, man. I like this. Okay, so that's on the daily. We put this on the weekly. Oh, man, look at this. Okay, so on the weekly, folks, we're going to end up doing about 12 million shares. 12 million was going into 40 million. And you're going to have a failure of even last week. You get a failure of every single swing point on a weekly 1, 2, 3, 4, 5, 7 weeks. Yeah, and what's screaming out there is 252. That's not bad.
Hey, on the Nikkei, because you get volume levels.
Yeah.
So on the Nikkei, when it punched through the that June 7th low 2 nights ago, June 13th, did it do it with volume?
It didn't. So check this out. This is what's really cool, folks. Okay.
Okay.
So what the Nikkei did is this. First, the B point had volume of 3.2 million. Well, we took it with 2.4. Okay, so it's lighter volume. That's the first one. The second one gets better, though. You were coming in to where the strength was, and the strength was 3 billion and 4.7 billion. Okay, so that's on the daily. But watch this, folks, on the weekly, because the Nikkei is going to be a buy. It's not a buy yet, but it's going to be a buy. It's down at 11,200 or something.
Yeah.
Okay, so this year's 11,046 I got, actually. So what you have is this. And now that's going to be a heck of a retracement, folks. And, you know, you hear everywhere that the Nikkei's in a bear. It's like, give me a break. You know, the Nikkei, folks, went up like 80%, and now it's pulled back 20. It should. That's what it's supposed to do, okay? You know, my take is that the Nikkei is going to come into 11,046. That's how it looks up. But what it's also already doing, Steve, which is great, so it's already coming back, folks, on the monthly with lighter volume, and it's contracting dramatically, okay? Even last month, what you had is you had 16 billion. Well, you're coming into 18 billion, and this month, you know, we'll see what we get. But it's still got longer to go down. You know.
So the week of April 5th, which is what it's in right now. What was the volume on that session? On the weekly.
On the weekly, that is 14.9 billion.
Okay, and this week, what did we finish at?
Make sure I get the right one. No, the 5th is 14.9 billion. And you did it with 12.2.
Okay, cool.
Yeah, I know. Isn't it? You know, it's interesting because what you have, folks, and this is what normally happens in a really sweet buy. At the very end of this, right, what we should get is fast price destruction and a huge contraction of volume. And you want that contraction of volume not only, like, what we'll be looking for is this, folks. You know, I suspect it's going to go into that 18 billion, but you don't, that's the benchmark, the 18 billion. But what you want for the buy is that it's actually going to be less than the week prior to that. And so in this particular case, you're already dealing with 12, so it's probably going to be 10 billion versus the 12 versus the 18 billion that it's going into. And then what you also want to do simultaneously is that, you know, you're going to turn around and set that up with the yen, you know.
Yes.
And that's going to be, folks, we're going to be trading the Nikkei for a long time out here. You know, that bear market, that 30-year bear market is over in the Nikkei, you know. So it's going to get interesting watching this whole thing shake out. And in particular, now, as we're talking about different divergences, see, this is the best thing that can actually happen because people won't believe that it's over again. Oh, the school of deviance, folks. Steve Rhodes, Tom O'Brien, you stay right there. We're coming right back. We have the Dow on 35, NASDAQ off 11, S&Ps are off 4. We're going to be right back.
Are
you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Steve Rhodes, Tom O'Brien. Appreciate you growling and prowling with us, folks. And we have the Dow down 56, NASDAQ off 14, S&P's off 5. And it's going to be interesting here. We got a couple sellers, folks, coming in this marketplace on a Friday. Okay, so let's pull this baby up on a short-term basis, folks. What you're going to see is that there's no juice behind this move, okay? But you're going to get volatility. There's no doubt about it. So we'll take this, and if you just want to see how these contracts come in, folks, okay, I mean, you're talking nothing. So what you're doing right now is this. You did, let's see, last 10-minute bar, we did 12,000 contracts. Let's see, no, yeah, 12,330. And folks, guess what? You need a lot more than that to break this baby down right now. You know, this is a volatility on a Friday. That's all it comes down to. But I don't expect you're going to stay down here. If we look at the SPY, what you're going to see is this. You SPY, let's see, what time is it? 55. Well, I got to take the bar before that. You just come down at 2.6 million. You're going into 3.5. It's going to need a lot more juice than this to get to lower. So.
A good day to trade Nadex.
It's a great day to trade Nadex. And folks, you come over our website at TFNN, and you're going to see the Nadex banner in the very top on the side. You can pull that platform up. They'll put $25,000 of funny money into it. And bottom line is that your trade is your stop. And that's what's just absolutely phenomenal. There's no two ways about it. And what has happened, is that they have so many more contracts on there, folks, that, it's interesting because, see, when you look at the option market, folks, and you go back 15 years in the option market, it started out, small, and just they kept getting larger and larger and larger. And the same thing's happening with Nadex right now, because once you understand, particularly if you trade options, if you trade futures, if you're trading, basically actively trading equities, you'll see that the amount of money that you're putting up for your risk versus your reward, it's dramatic, meaning that your risk is a lot less, your reward is a lot more, and the amount of money that you're putting up in order to capture that is a lot less, which is the name of the game.
Hey, speaking of growing, why don't you update folks on the Tiger Real Estate Opportunity Fund?
Well, I appreciate that. I'll tell you, Steve, it's been, and folks, it's been a great trip. We started last October. Right now we own 29 units, housing units that have... Talk
about Go Long America.
That have 30, so out of 29 we have 36 units. We bought them all at the courthouse, and of course, if you haven't been following the real estate market, folks, the real estate market's gone up dramatically since we've been doing this. But what's really cool is we've never bought anything retail. We bought everyone at the courthouse.
Yeah.
We've done. And
are you seeing the inventory starting to thin out?
What's happened is this: is that we were averaging 600 searching titles a month.
Yes.
Now we're down to 450. So it is coming down. But we're still at 450, which is good. What does happen, which is just a mind blower, folks, if we put something out there, whether it's for rent, they're gone in like 2 or 3 days. It's pretty amazing. But if you do have an interest in it, the fund will be opened only for about another 3.5 months. The fund's going to be closed to new investors on September 30th. If you do have an interest in it, just come over to our website at TFNN. You can check it out. We have 2 different minimums. One's $100,000, one's $15,000. It's Steve Rhodes, Tom O'Brien, and Steve's selling that market. I can see him.
I am short right now.
Yeah, it's a beautiful thing. You stay right there, folks. Good night, man. Mr. Basil Chapman coming up next, and then we got Nico to keep you healthy. Have a great one, folks. Have a safe one. Thanks, Steve. Have a great one, man.
Happy Father's Day, folks.
Yeah.